Now, why is this happening? Okay. And for those of you who follow my work, I hate that question. Why? Why? Just deal with the what and the how. If you're lucky, you can deal with the how. As a trader, as a speculator in markets, it's really difficult to answer why. And I think it's almost a bit arrogant, right? First figure out why first figure out what is going on. All right? If you're lucky enough to figure out what's going on, and then if you are skilled enough to figure out how it's going to happen, then why do you need why? Nobody knows why, right? But with a high degree of probability, we can speculate the why. Why? Well, because we have this information. Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 28th, 2023. And yes, this Bitcoin pump is for real, and I'm going to tell you why. If that sounds interesting to you, then watch until the very end. If you've seen this week's video, you'll understand that we called this pump to the upside. Not only that, we traced it or tracked it, right, with a purported or with our best guess using Elliott wave analysis, right, going to 32,000 back till 29, I believe, and then matriculating up to 42 to 43,000. Okay, so we said that this was likely going to happen before the end of the week because the end of the week represents the full moon, and full moons typically represent local market bottoms, especially when you're dealing with uptrends, when you're dealing with impulsive price action. Furthermore, when you have the end of the week, you typically don't get positive price action when the US dollar currency index isn't moving. Anyway, let's get into it. Let's start on the small time frames. This is something we haven't seen in quite some time. Okay, let's adjust our chart of Bitcoin against the US dollar or against the USDT, right? You can see that we're at the top of this range, okay? This is a range that we've been in for quite some time. Let's extend it for a bit. And if you take your measurement tool, you can see that this is a 40 plus day range, okay? 40 plus day range. Right now, you're at the top, okay? So one of either two things can happen. Either you break the range to the upside and you say goodbye to the range, and then you can conclude that, yes, indeed, that range was accumulative. It was accumulation, okay? Consolidation is either accumulation or distribution. It can't be anything else. It's either this or that, okay? It can't be this and that. Price has to move. It has to make a decision, okay? If we do indeed end up breaking this range to the upside, then our plan, our trading plan, our postulations earlier in the week were absolutely true. This was and has been a 40-day accumulation. Okay, I want you to think about accumulations or any consolidation as a cause. Okay, for those of you who study Wyckoff analysis, you'll understand what I'm talking about. Everything is cause and effect. So in trading, when you have price going up and down and up and down and up and down and up and down, it's basically preparing to make a big move. Okay, it could make a big move up or it can make a big move down. If it makes a big move up, that's accumulation. Big move down, that's distribution. Your task as an analyst, your task as a trader is to figure out what is the more likely move to be made, okay? And so we've decided that this was likely to break to the upside. So if it does break to the upside, let's zoom out for a second. Where's it going? Like we said, it's more likely than not to hit our first significant resistance at around 32,000, okay, which is the top of this range now, okay? And that should be one quick move. Why? Because look at all of this price action. This is clearly a volume gap. Volume gap is where there was a move and there's no balance in that move. So this was clearly just selling action, right? There's no buying, right? So you need to balance that with some buying. So you get already around here, and then you may consolidate a bit and then finally reach the top. The top of this range is a target, and that's 32,000. Now, once we hit 32,000, just like we said in the previous video, is more likely than not that we put in some sort of retracement, and that retracement is more likely than not to be a three-wave retracement, retracing to between the 0.5 and the 0.618 of the preceding uptrend. Okay, that would be a wave 2 situation, and then you would matriculate, go on for wave 3, and so on and so forth. Okay, so that's still what we're seeing. Okay, it has taken quite some time, but we still have some time, right, before the end of the week. Are we going to get the 43,000 before the end of the week, or just the 32,000? I'm not exactly sure. But what I do know with a high degree of probability is that we're going to get something before the end of the week. We're going to get either that $32,000 move, or we're going to reach our target of 43,000. And the other thing I want to say is that when this does happen, it's going to be a hell of a lot quicker than what we've been experiencing. Okay. Another thing about consolidation I want to point out is that it's slow, characteristically slow. Any consolidation, accumulation, distribution is slow and sideways and choppy and up and down and up and down and up and down and up and down and up and down. Why is it slow? Because it's not impulsive. Because there's so much price action to the left and to the right that is, well, to the left, that is causing it to move more slowly, more deliberately. But once you break the resistance of any consolidation, you start moving quickly. So for a lot of people who don't do charts, they don't look at charts every day like, you and I, and, they're casually following price action. They think there's no way in hell you can move that quickly, that high, right? Even though the move to 32,000 from where we're at right now, as of recording, is just a 20% move, which is not much in crypto, right? But given the historical price action from the beginning of the year and the past 40 days, I can understand why a lot of people, they conclude that that would be unlikely. But then that is not really understanding what we've been doing for the past 40 days. And another reason it's going to go really fast is because, again, this is the cause, this is the effect. There's a saying in trading: the wider the base, the higher in space. Okay? Meaning, if you're dealing with an accumulation, if you've been accumulating for quite some time, like 40 days or 400 days, expect the pressure, the buying pressure built up from that consolidation, that long-standing consolidation, to be then expressed in a very strong, very fast-moving, kinetic move to the upside. So this is also why I kept saying in my previous analysis that when we go to 32K, don't expect a small, slow move, right? Expect a quick move, boom, and then a little bit of consolidation, boom, retracement, and then a continuation, consolidation. This is why you have to plan ahead, plan beforehand, because when it happens, it happens too quickly. You don't know exactly when it's going to happen. Have the plan beforehand, trade your plan your trade, do all that stuff, prepare, and once you get more data, you refine. Okay, so that's Bitcoin. Now, why is this happening? Okay, and for those of you who follow my work, I hate that question. Why? Why? Just deal with the what and the how. If you're lucky, you can deal with the how. As a trader, as a speculator in markets, it's really difficult to answer why. And I think it's almost a bit arrogant, right? First figure out first figure out what is going on, all right? If you're lucky enough to figure out what's going on, and then if you are skilled enough to figure out how it's going to happen, then why do you need why? Nobody knows why, right? But with a high degree of probability, we can speculate the why. Why? Well, because we have this information. For the past, and I've shown this a ton of times on the channel. For those of you who follow me, follow my work, you'll know this like the back of your hand. For as long as Bitcoin has been in existence, it has tracked the US dollar currency index almost exactly as an inverse correlate, meaning it's inversely correlated. It does the opposite of what the US dollar does. The US dollar goes up, Bitcoin goes down. US dollar goes down, Bitcoin goes up. This chart shows it to us. That is the hardest, most rigorous, best data we have as to why the market moves the way it moves. Okay? So when you're talking to Willy Woo, you're talking to what's that other guy's name? Reflexivity Research. They have all these fancy charts and all these reasons and all that stuff. At the end of the day, if you want to keep it stupid simple, just look at this chart. There's one chart telling you why. Why do we look at the US dollar currency index on this channel? Because that relationship is so strong, so convincing, and it really hasn't failed us since the beginning of Bitcoin's inception. Why would we look anywhere else? Why would we bother considering anything else? Why is Bitcoin finally moving? Well, it's because the US dollar is finally breaking down. Okay, just like I said on Tuesday, what day is it? Thursday, Tuesday, yeah? We've been in about a 70-day uptrend, okay, with the US dollar, all right? This uptrend, don't be fooled, is not a purely impulsive uptrend. It seems that it's clearly a part of this larger move, okay? And for those of you who do Elliott wave analysis with me, you'll recognize this as being a flat correction, okay? An A, B, C flat correction, where the C wave is the final leg of the corrective pattern, and the C leg is the impulsive portion of it. Now, it's impulsive insofar as it's the last leg of a corrective pattern. Every last leg of any corrective pattern, a ABC, a WXY, an ABCDE, is impulsive. But we know that once the correction is over, what do? You basically resume the initial direction of the price action. So this was, I think right now, we have the clearest read we've had on the US dollar currency index for years, okay? Because you can clearly take a Fibonacci retracement tool from the top of this, right, to the bottom, and you can see that this wave that we just pointed out, this three-wave move, this A, B, C, and where is my Fibonacci retracement tool? It went away. Let's put it back on. You can see that it hit our minimum retracement level of 0.5. Okay, why is that important? And I said this on Tuesday. For us to have a legitimate zigzag, a zigzag is an A, B, C correction, okay? Where you have 5 waves in the A wave, right? 3 waves in the B wave, and then 5 waves in the C wave. That is one of the main corrective patterns in Elliott wave analysis. Again, it's in 3 waves. It's in 3 motions. And again, 5 waves, 3 waves, 5 waves. This identifies as a zigzag. And so now that we have this information with a high degree of probability, we're able to track the US dollar currency index. We're able to say for the past 230 days, the US dollar currency index has been in a massive flat correction, a B wave. And that correction is finally up, okay? That correction ended to the upside because, right, you go up, down, up. But the larger correction of the US dollar currency index is a massive move to the downside, okay? And this is what we're looking at, and this is what we're looking for. We're looking at this potential zigzag all the way to our target right here, okay? I think it's going to be shy of this resistance right here. Let me zoom out for those of you who are not privy to this chart. This is basically my US dollar currency index Elliott wave analysis from as far back as I can go, and we're clearly in a channel. and we've got an ending diagonal here to end this channel. Okay, and you can see that this is our initial break of structure. All of this zigzag ABC is our initial break of structure. And I think what happens, why do I have it down, why do I have the target here and not down here? It's because this ending diagonal, there's some kind of, it's not a rule, it's a guideline. You can read it in Prechter and Frost, 11th edition, where if you put in an extension, right, an ending diagonal and an extension, your initial break of structure is likely to target, I believe it's wave 2 of the extension. That's why I have it here, okay, and not all the way down here. In any case, all that to say is this: the US dollar currency index up for 200, or in correction for the past 230 days, up for the past 70 days, is coming the hell down. And it's coming down, which should mean what? It should mean a move up in Bitcoin. It should mean a move up in crypto. That means this move is legit. So many analysts, so many traders are telling you, oh, where to short, where to short. You don't want to fuck around and try to fade a 40-day accumulation in Bitcoin and in altcoins, a 300-day accumulation. Because remember, Bitcoin has been up for the whole year, about 70%, right? Not so altcoins. Altcoins have been downtrodden, right? Altcoins are just now coming out of the winter. Look at this. This is the total 2 chart, right? This is the aggregate chart of all altcoins in the in the cryptocurrency market. I'm taking this measure from December, the bottom of this, December of 2022. Look at what we've been doing. We went up and came down, and we've been ping-ponging. We've been finding support on the 0.618 Fibonacci retracement level, okay? And that is part of this accumulation. If you zoom out even more, because this is a 4-hourly time frame, right? Zoom out on the weekly. What do you see? Actually, let's zoom out on the daily. The weekly's too much. Zoom out on the daily. Guys, if you're getting value, please like, share, and subscribe. Zoom out on the daily. What do you see? You see that altcoins have been in this channel of accumulation for the past 466 days. You do not want to fade that move, okay? It's very clear that your next significant resistance for altcoins is up here. After that, you may get a retracement. You're likely to get a retracement, and then you're likely to continue, right, to this larger retracement level. So fading any altcoins, whether it's Link, whether it's anything else, is silly. It is absolutely silly. Zoom out. Do yourself a favor. The time to short is long gone. You should have been shorting back here, maybe at some point here. Still risky because you're in consolidation and you're going up and down and up and down and up and down. Every trade is a risky trade, but it's definitely not time to short right now, okay? Not financial advice, but do what you want. I wouldn't touch it with the 10-foot pole. In any case, why are we going up? Why is Bitcoin moving up? Why is crypto moving up? It's because the DXY is moving down. Guys, if you got value, definitely like, share, and subscribe. That's my read for today. I hope this is helpful. Hope it's useful. Let me know what you think in the comments, and I will see you next time. Take care.
All is well.